Hello! So Burnham's ruled out joining the EU, the single market or the customs union. Jackson Hole begins this week, where Warsh will face a test from the bond market. And will Trump put 50% tariffs on Canadian cars? It's Tuesday the 25th. I'm FxPlew and this is the market brief. So Burnham's been on. He has committed to honouring Starmer's red lines on Brexit. He will not rejoin the EU, the single market or the customs union. Now, why is this significant? Well, Sir John Major piped up last week suggesting that we should rejoin the single market, as Brexit is costing Britain about £100 billion a year in trade and around £40 billion in tax revenues. When Burnham was Manchester Mayor, he was pretty clear that he wanted the UK back in the EU, and some hoped he would tear up Labour's Brexit manifesto commitment. However, his Brexit minister has refused to rule out rejoining in the future, and that is doing quite a lot of work as a consolation prize. PMI services beat forecast and hit a 6-month high. That came out at 52.8 in August. Consumer confidence also rose to the highest since August 2024, adding to a good run of better than expected data, providing Burnham and Healy with a little breathing room ahead of the budget. Government borrowing remains the fly in the ointment though. That's after July posted a £1.8 billion deficit in a month that should have been a surplus. Benefits spending is an unavoidable pressure point at the moment. Over in the US, the Jackson Hole Symposium begins this week. That is like the annual off-site for the Federal Reserve, and it's the first one for Warsh as Fed chair. It may be a test given the current spotlight from the bond market. He has stepped away from forward guidance, reluctant to spoon feed the market on interest rate intentions, but with a 30-year Treasury yield at new highs and the bond market relatively rattled by Iran-driven inflation fears, traders will be hanging on his every word. Besant's buyback intervention may have steadied things briefly, but it won't hold off underlying market pressure indefinitely. Trump has been on. The 50% Canadian tariffs may be extended to cars, trucks and automotive parts from January after trade talks collapsed last week. Dear old Donald has a bee in his bonnet about the US trade deficit with Canada. However, if you cut out oil imports, the US actually runs a surplus with Canada, but you know how Trump likes his tariffs. Meanwhile, in the market, the dollar index edged back towards the 99 level on safe haven demand, driven by impending Iran sanctions and US-Canada tensions. Cable kicks off a little lower, with sterling around 136.25 against the dollar. We are fairly flat against the euro, around 116.90, and euro dollar is down around 116.55 on the open this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.